Testing, testing, testing. Testing, testing. Yeah. Sorry about that. Okay, and... Okay. My bad. Well, I guess we have to... start over. I don't know how the fuck that happened. Somehow my default recording device got switched, but we are good to go. So I will say again, welcome to Shitcoin Church. Obviously a lot of excitement in the markets right now. Tesla added $1.5 billion, billions and billions, $1.5 billion to the balance sheet. Which is super impressive. The way I see that, and you had Elon talking shit about Bitcoin in just December. Saylor hit him up and was like, "Yo, dude, hit me up. Like, I'll show you how to do this shit. Do your shareholders a favor, do everybody a favor. Let's rock and roll, dude." And Elon was obviously like, "Word, let's go." But Saylor's he's a fucking salesman, I know a salesman. I'm a salesman. I've sold shit my whole life. It's what I do. So, Saylor turned Elon Musk, presumably turned Elon Musk into Bitcoin Elon Musk, which is, look, trust the plan. Like, we all know you're going to be able to buy a Tesla with Bitcoin. Like, that, it'll be so frictionless. Like, go on the side, build that shit out, pay in Bitcoin. Like, everybody's got money in Bitcoin. Like, Tesla is going to become the best selling fucking car of the year, period. Model 3s, Model S's, Model Y's, Model X's. Elon's going to move mad product, and Tesla stock is going to go to the fucking moon. When other people see the amount of sales Elon is able to capture, just by enabling something like that, I think that they'll hop on board. And I think that you'll be able to use your Bitcoin to buy a lot of stuff, which will be fucking awesome. But today, we're going to talk about just some psychology. I am going to talk a little bit about properly de-risking or shifting risk as well in your portfolio. I know there was a hack today on growth DeFi, so for anybody who's affected by that, apologies. As always, don't ever have exposure to one thing to where if something like that did happen, it would take you out of the game. Don't go all in on DeFi. This is something I've talked about over and over and over again. I've got an extremely heavily weighted DeFi portfolio. But I've got exposure to Bitcoin. I've got exposure to Ethereum. I've got exposure to other things. But at the same time, if maybe I've got 6 concentrated bets or areas that I'm focused on. Like, if one of those got totally fucked and I lost all that money, would it hurt? Fuck yeah, that would suck. I'd take a 15% haircut or something like that. But that's all it would be. And I could move forward from that. I could live with myself. But never just be long dick, all fucking in anything in DeFi. It doesn't matter if it's Aave, Curve, the most synthetics, even the most battle-tested protocols aren't safe. YFI. So just keep that in mind. Shit could get weird in DeFi. When I'm talking about de-risking, you can still maintain exposure, right, to the market. Presumably we're in the midst of a bubble forming. The apes are coming. They're coming to buy all our bags. Kraken had so many fucking signups, they had to shut down signups because their system couldn't handle it. Guys, the signs are there. If you know where to look, the fact that, imagine, so many people now are able to just get on their phone and go to their fucking Blockfolio and easily swap any crypto to any crypto with fiat on-ramps, that's huge. The access to crypto right now, the ease of access to crypto right now relative to how it was in 2017, the last mania, it's night and day. The infrastructure's been upgraded. We're ready to handle the wave. presumably, you know, we'll see how intense this gets. You know, somebody made a good point on Twitter earlier. I can't remember who it was. But, you know, people, like literally the stars are aligned. Like, people have been cooped up inside, like, the entirety of 2020. Like, everybody's a fucking trader now. Like, everybody's fucking with options on Robinhood. Everybody's trading stocks. You know, why not crypto? Like, we made it easy for you. You know, come on. Like, let's go. Get on the party. You know, come be a part of the future. And, you know, crypto does have that Ponzified allure, you know, where I can come in and I can be greedy. And there's people experiencing this right now. You know, you come in, you're greedy, and you get multiples on your money, you know, and with relative ease. So I'm super bullish on, you know, crypto in general right here. And it doesn't mean that there won't be road bumps along the way. But, I mean, what Elon Musk did, or what was announced today, I don't think people understand just how important that one thing is. You know, it opens the floodgates to crypto. You know, the legitimacy that brings to Bitcoin. You know, Elon is worshipped and loved by, I mean, I can't think of one fucking person that isn't obsessed with Elon Musk. You know, and for good reason. Like, this is the guy that's bringing us into the future. You know, it's truly incredible. And now you've got this guy that says, you know, we got $1.5 billion of Bitcoin. Like, you know, he said that mainstream adoption is like knocking, you know, is on our doorstep. You know, after Elon Musk, not only, you know, is every just normal retail guy like me or you gonna want to have some Bitcoin, but, you know, every fucking person is going to want to have a little Bitcoin. You know, if it's good enough for Elon, you know, if they've got some Bitcoin, or if he has some Bitcoin, I might as well, right? So I think that was like the final nail in the coffin for any kind of bear thesis. You know, Elon first and many to follow. There's going to be several companies coming in, adding Bitcoin to the balance sheet. You know, Michael Saylor had that conference. It might even still be ongoing. I'm not 100% sure. But Michael Saylor turned Elon Musk, one of the smartest men in the world, the richest man in the world, in December, you know, I quote, he said something like, Bitcoin is almost as dumb as fiat, to $1.5 billion in just a month. You know, Saylor is the best salesperson that Bitcoin could ask for, or could ever ask for, just because of the fact that he was a non-believer. You got a guy that thought Bitcoin was a fucking joke. He thought it was stupid, who's now the biggest corporate Bitcoin shill in the world. So, you know, just from a sales perspective, you know, when you're able to connect with people, because all of these guys are non-believers, right? You know, he's trying to sell them on the fact that this is the way. You know, he's got that personal story to tell, you know, and he knows what it feels like to be a non-believer. He knows the objections that a non-believer will have, and he knows how to address those objections. You know, in sales, all it is crushing objections. That's it. You know, at the end of the day, people are afraid to say no. Hey, buy this. You know, oh, well, there's always some kind of excuse. That's called an objection. Well, buy this car. Oh, well, you know, I don't think I can really afford it. Well, let me show you that you can afford it. All right, what you got for me now? At the end of the day, they just have to say yes. You know, if you don't want to be sold on something, don't give a salesperson a fucking objection ever. Like, if somebody starts giving me objections and I'm trying to sell them something, I know that's a sale. I've got it in the bag because I'm gonna crush that shit. You know, the only way to tell a salesman no is to just say one word: no. If I tell him why, I'm fucked. A good salesperson will take that why and turn it and use that as ammo against me. So, give some respect to Michael Saylor. Fucking love that dude. Huge respect to Elon Musk. The horde is coming. The horde is coming. So here's the thing. Tesla is going to become, like I was saying this earlier, I might have been saying it, you know, but Tesla is going to become the best selling car in the world. Everybody's about to get hilariously rich on Bitcoin, and guess what they're doing? They're gonna get a Tesla. I already ordered my Tesla. I was looking at a bunch of different cars. I decided the Model S refresh came out. You know, I decided fuck it. You know, I like gas. I like to hear my engine, but you know, I'm gonna try this shit out. See what it's about. I got my pre-order in for a Model S Plaid Plus. Looking forward to that big time. You know, I was just thinking to myself, how cool would it be to go on a road trip and just to punch that shit in my GPS and just drive there, right? Road trips suck, at least in my opinion. And I don't know, you know, in my family at least, like I'm always the driver. Like I chose to be that way, you know, I wouldn't have it any other way, but you know, still it sucks. Like I know that if I'm driving, like we're gonna get there safely, you know, I'm very attentive. I'm very aware of what's going on around me, but it still sucks because, you know, that I have to do it, you know, but what if you could just hop in your car and just whoop? I mean, that's badass as fuck. Like 100%. No, I get it. I don't have a picture of it. You know, I get this at the end of the year, apparently, you know, if it's on time. Really, man, it's gonna be cool. And I know my wife, my car right now is so loud that when I cold start it, it wakes up all the neighbors. So I know my wife's gonna be really pleased that that's not the case anymore. You know, I'm old now. Like, you know, that shit was cool when I was, you know, in my 20s. But you know, I'm an adult now. I gotta be somewhat like reasonable. You know, I can't just be driving around like loud as fuck. Like. Right, I'm going with black with the arachnid wheels, black interior. That white interior is fucking sweet. I'm not going with the RS7. The RS7's fucking sick. Don't get me wrong. I'm not going with the RS7 though. You know, I did a lot of thinking about it. The Tesla's the way. I want to give it a shot. I've got a buddy of mine that has a Tesla, has for years. You know, I asked him, well, what about the build quality? What about this? What about this? He said, eh. He said, dude, this is the best car I've ever had. Like, hands down. If you ask anybody else that has one, they'll say the same thing. I trust this. I was like, all right, man. And two, I mean, this Tesla is going to go 0 to 60 in 1.9 seconds. So, you know, fuck it. Shit's faster than a $1 million car. My car right now is fast. I've got an S4. It's a 2015.5. It's the B8.5 S4, and it's APR tuned. It's stage 2 plus. So it's got the ultracharger upgrade. It's a wider throttle body. It's got the intercooler. It's got dual pulleys. It's got ECU software and TCU software. And then I also have CAD-back exhaust. Oh, and the carbon fiber air intake. It'll go 0 to 60 in low 3s, all-wheel drive. It's a fucking awesome car. I'm actually not getting rid of it. My parents have room for like 4 cars in their garage, so I'm gonna just park it at their house. And it's good to have a spare car around, you know, if something ever happens. I love my car right now. You know, it's got 35,000 miles on it. There's no fucking need to do anything with it. But yeah, so today, you know, we're gonna talk about a few things, and we're gonna use Nansen. We're gonna look at some bitch hands. You know, let's talk about some psychology. Like, I'm not here to show your shitcoin. You guys know what I'm in. I'm not interested in getting in other things. You know, I've said this since late December. I have the best projects in DeFi. I still feel that way. You know, every day I continue to do research, and that thesis continues to be validated. You know, which is amazing. and I'm quite comfy right now. You know, I've shaved a little bit off the top of things. You know, I still got big core positions. You know, I took a big chunk of Badger, and you know, I shifted that to Dig when Dig was really low. Dig's fucking right now, so I'm really pleased about that. You know, shaved off a bunch of cash. You know, I put that cash in professionally managed pools on DHedge. You know, letting Convex Monster and Wengarian take care of that. You know, they're both ex-TradFi guys. You know, I'm letting them take care of business. You know, the idea here is that, you know, yeah, like that's pseudo cash. I maintain some market exposure. It's professionally managed. Like, downside is managed. I just get to let these guys grow my fucking money and not be too degenerate about it and just focus on stability and sustainability. And just watch my number grow. It's fucking sick. I love, you know, the DHedge platform. I'm also getting like 30% APY. I'm mining DHedge token by being in those pools. So I guess I'm a DHedge DHT holder as well now. Another 3 Arrows bag. Good shit. You guys know 3 Arrows fucks, so you know, happy to be involved with anything that they're involved with. Right now, I've got ROOK, I've got Hxro, I've got Badger, I've got Dig, I've got 88 MPH, and then I'm in, I've got MTA, duh. And then I've got a large cash position in those DHedge managed pools, managed funds. You know, I was just thinking, I was like, you know, like my initial cash, you know, of course, when I get to a certain level, you know, I'm going to take some more cash even, and I'm going to put that in even less risky, you know, just normal staking, get 20% APY, probably using mstable earn, you know, or mstable save. But for now, you know, I was like, you know, I've got this cash. I don't necessarily think it's a great time to just be in straight cash, just because the markets are still moving. So, you know, why not throw it in these pools? Why not let these pros manage my shit and manage my downside, you know, and still maintain some exposure to the market? You know, Convex Monster focuses heavily on Bitcoin and Ethereum. You know, and he'll balance that out, and he'll shift around, and you know, and he'll de-risk and allocate risk, you know, based on certain things. So, you know, that gives me really good exposure to Bitcoin. I've also got exposure to Bitcoin through Dig. That is a synthetic Bitcoin, which is really cool. It's a Badger product. Badger's absolutely fucking, you know, almost $2 billion in TVL now. Just quite impressive. They continue to push the envelope. They continue to innovate. I mean, Badger is pretty much the new YFI. Is the new kid on the block. So, you know, a lot of people are really excited about Badger. I'm still really excited about Badger. I think Badger could potentially go, you know, 200 plus. So, you know, we'll see what happens over the next few months. The main thing, though, is, you know, as your numbers go up, you know, and you're looking at a project and it's just gone absolutely parabolic, and you find yourself 10x, 15x, 20x, whatever that multiple is, you'll never, ever, ever, not once regret shaving 20% off of that and moving to safety. Ever. Fuck, if you're at 20x, shave 50% off of it, move it to safety. Or shift, doesn't even have to be safety, you know, shift some of that risk to Bitcoin. We all know Bitcoin's going to 100K plus. Like, shift some of that risk to Bitcoin, you know, shift some of that risk to Ethereum. You know, at some point, you know, we are gonna have that Giga Chad Bitcoin candle, you know, it's gonna rip 20K in a day or some crazy shit like that, and that'll crush altcoins, you know. But for right now, everything's gonna kind of move in unison. It's unbelievable how well what's going on right now is mirroring, you know, what happened in 2017. And I think that there's still, these DeFi projects are still so undervalued, you know, as a whole. Aave, you know, is obviously incredibly undervalued. It's not even in the top, like 5 projects yet. But, But even beyond that, you know, if you really think about it, you look at things like Hxro and like ROOK that have greater 30-day cash flows than projects like Aave, Curve, Synthetics, the blue chips, right? And you start to wonder, do I have the next blue chip in my bag? Well, the data surely supports that, you know, and DeFi cash flow is king. So I've got something that, you know, for a much lower valuation, much lower, significantly lower, is producing substantially more revenue than the biggest, baddest, craziest, best shit out there. Like, come on. Come on. That's undervalued as fuck. It's just gotta be. I mean, there's no other explanation. And especially, you know, people have said this too, and this is a valid argument. Well, how is retail gonna come in and you know, all this dumb fucking FOMO money, how are they gonna come in and buy your bags, which are DEX bags, up to absurd valuations? Well, there's two answers to that. One, I'm not counting on stupid fucks to come in and pump my bags. I'm counting on funds, real money, big money, to come in and take positions in the things that I'm in because of these PS ratios, because of these cash flows. That's the kind of shit that makes the real money salivate. And the real money is coming. The real money is already here, but it's coming in force. I don't give a fuck if some pleb buys Doge or whatever. Doge. Go ahead. Here's the thing, you know, hedge funds and shit, they're gonna come in and what do you think they're gonna buy? Well, they're gonna look at these metrics and these protocols like your price to shares ratio and stuff like that, and they're gonna coom. Because it's awesome, it's amazing, and that's on terms that they can understand. They're gonna see that and they're gonna see huge value opportunities here, you know, for investors. And we're talking about professional money. We're not talking about bitch hands. We're talking about big boy money, right? So that's one answer. I'm not counting on plebs. I'm not counting on a retail rush to pump my bags. A mania is more than just dumb fucks coming in and buying Dogecoin. A mania is everybody is coming in and everybody is excited to be a part of this crypto movement. I mean, you've got Mark Cuban fucking around on Aave and with sushi and stuff like that. I mean, if he's doing it, come on. Other people are going to do it too. I mean, these are the kind of guys that other VCs, you know, look up to. You know, you've got guys like Naval shilling DeFi. You know, that's the kind of guy that real money, funds, VCs, that's the kind of guy they look up to. So I don't need plebs to pump my bags, you know? I don't. I want the big money to come in and pump my bags. And that's how I've allocated myself. You know, I don't need retail to come in. You know, my shit's undervalued. Come in, fucking buy my bags up to billion-dollar valuations, make me rich as fucking hell. I'll be de-risking on the way up. Doesn't matter when the music stops. I'm de-risking as we go. You know, everything goes to zero. Doesn't matter. I've been de-risking. Shift risk. You know, little by little, not all at once. DeFi's got a long way to go. But you'll never, ever, 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 ever regret putting a little bit aside. God forbid something happens. Look, let's say with growth, that's a good example. You know, I hate to rub salt on the open wound. A lot of people, you know, that shit pumped hard, right? A lot of people had that 10x and they got greedy, right? Imagine if those people said, well, fuck, I'm 10x right now. Let me shave 25% of this position off. You know, put it in some safety. That's why we do this kind of shit, guys. Can you imagine not? Why not? Why wouldn't you do it? Why wouldn't you do it? You know, another thing, a lot of these good DeFi bags are on Binance, you know, or are on Blockfolio, or on FTX. You know, this new retail rush has access to them. So they can FOMO the fuck out of it on Binance for all I'm concerned, and guess what? The guys that can't afford gas on Uniswap will arb that up. you know? So am I concerned that even though I have the best bags, right, as I've said, that these bags aren't going to get the attention that they deserve? No. 0% concerned. Because they are going to get the attention that they deserve. 100%. 100%. Now, let's talk about something else. And this is an extension of what I was discussing earlier in regards to... Why is my camera out of focus? Hold on. There we go. This is similar to what I was discussing earlier in regards to, you know, you don't want to have your DeFi bags, or your DeFi portfolio all in one bag, or even two. Have it spread out 5 or 6, you know, enough to where if one of these things moves, like, it makes a difference, you know, it matters. But also, you know, you have to have it to where you're concentrated enough, right? So if something moves, it matters. You know, you get that upside. Hold on, guys. My cat's being a fucking bitch and she's rattling the door behind me. I've got to throw her out of my office. Give me a second. Hey, you stop that shit. This is the bad kitty in question. You're banned. Beat it. Balls. Jesus. Anyway, let's say you are de-risking a bit, you know, and a good example, you know, Rookie XPT just said on Twitter, you know, big props to that guy. He's been fucking killing it. Did he hit like a major milestone that was like his ultimate plan, but he hit it like 10 months early, you know? And I said, well, you know, yo, take half of that, throw it in cash, get 20-30% APY on these stable coins right now. Here's the thing, you hit that major milestone, half of that, that's still a good number for you, right? You know, that'd still probably change your life. So why not, you know, put that shit in stable coins, and then you rest easy knowing that you've already made something. You've already secured the bag. You rest easy knowing that this bubble could pop tomorrow and you walk away like a king, right? That peace of mind is big, you know, the ability to sleep, the ability to know you made it, the swagger you carry when you know that you're good. It's just all good. You're set, you know? Hey, this shit can go to zero tomorrow and, you know, maybe I don't have as much money as I want, but I'm good. That's a good feeling. But DeFi, even when you're taking, you know, let's say you make $10 million, right? And you're like, all right, I got 5 mil, you know, I want to de-risk that. Worst case scenario, I got 5 mil, get a house, get a nice car, you know, I'm set, right? You don't want to just take that whole 5 and just chunk it into one thing. You know, that one thing, that one vault gets hacked and you're fucked then. You know, same concept there. Spread it out to 5 or 10 different vaults. You know, in doing so, you're reducing your risk surface. You know, what are the odds that if you're in 5 vaults that all 5 of them get exploited? You know, a lot lower than being in one vault and watching that one vault get exploited and you boo-hooing about it. So just remember, you know, in DeFi diversification, whether that be in your portfolio, your farming, diversification is very important. Very important. Hold on, guys. I'm trying to catch up on the comments here. Oh, I've already posted my desk setup on Twitter before. Yeah, but anyway, guys, diversity, de-risking. Remember, when you have those gains, when you get that 10x, 20x, don't be greedy and wait for more. Like, bro, you just got a fucking 10x. Like, that's insane, dude. Like, you know, A, congrats, and B, de-risk a little bit of it. You know, yo, 20%, toss it into Bitcoin. Easy peasy, right? Wash your hands, sleep easy. That's the way. So, you guys know I don't do paid chills, ever. And despite me being very public about that, I literally constantly get DMs on Telegram for people being like, hey, what would it cost to... Dude, nothing. What the fuck are you talking about? Like, I don't need your money. Like, I'm not gonna... I will talk about your project if I look at it, and I like it, and I buy it. That's it. Especially with services. You know, you guys know I discuss Nansen a lot, but I've used Nansen to inform my buying decisions. You know, it's an extremely powerful tool, and, you know, I'm happy to pay. I don't even have a free Nansen sub. I paid for it for a year. You know, and I don't show you an affiliate link or anything like that. I'm just talking about the shit that I like. So on Twitter, yesterday, or the day before, I can't remember which, I came across something that I'd never seen before, and it's called Token Terminal. Give me just a second. I'll go ahead and I'm going to shift over to desktop so you guys can see this shit. Where we at? Whoa, what? And that ain't right. Hold on. Hold on. Something's fucked up with this. Like, what in the hell? Apologies, guys. Give me just a moment and I'll get this sorted. This is stupid. Hey, okay. Like, the fuck? I don't know what happened with that. Okay. So I came across this Twitter account, Token Terminal. I'd never heard of the product before, but it looked really interesting. It looked really professional. I thought it was really neat. I haven't signed up for it yet because you don't need to sign up yet. You can actually access the terminal right now for free with no account, which is really cool because, you know, I know for some of you guys, Nansen's a little bit expensive, but this still is free to use. You know, you can sign up for a plan. I think it's like $3,000 for a year or something like that. The advantage of having a plan right now, if you were a data scientist or you wanted to do something with the data, the raw data, you would be you would be able to download that data. Okay, you'd be able to do something with those numbers. In the future, I've been told that they are going to have different tiers. Maybe in a couple of months, you will have to have an account to actually look at some of this shit. But for right now, you don't, which I really, really like. Okay. Why do I need to check my MetaMask? I mean, anyway, this is called a Token Terminal. You can get to it, tokenterminal.com. Really neat here. You know, they've got revenue. When I talk about DeFi a lot, I talk about cash flow. And this is a really, really interesting way to visualize cash flow in DeFi. And they've actually got right here, revenue sorted by all of this shit. And I would imagine for Ethereum and Bitcoin, revenue is in terms of fees paid. right, to transact on the network. But revenue is, you know, protocol fees in terms of Uniswap, SushiSwap, Compound, KeeperDAO. Two of the bags that I have, KeeperDAO and Hxro, have higher 30-day numbers than Aave, Balancer, Synthetics, Yearn, Maker, Curve, Ren, Cream, Perp. Unbelievable. It really is unbelievable. So you start to think to yourself, you know, like, maybe, just maybe, you know, these things are mispriced. You know, you can look for value here, and one way to look for value is price to sales. Uniswap price to sales 17. SushiSwap 7. SushiSwap is undervalued relative to Uniswap. KeeperDAO 4.81 P to S. The lower P to S, the more undervalued something is. Perpetual Protocol 85. Compound 23. MakerDAO 74. Aave 115. Yearn 24. So let's just say, you know, that Yearn could be a good benchmark here. You know, Yearn is not too high, it's not too low. We're looking at a 24.4 P to S. And then you've got ROOK at a 4. So ROOK is 6 times undervalued, you know, relative to Yearn, which is really cool. It's a way to kind of compare apples to apples. Now, mStable, yeah, does not have the best P to S. Look, Synthetics 99, Balancer 63, Rarible 78, Ethereum 40, Bitcoin 528. mStable does not have the best P to S. You can actually look at the mStable P to S right here. It's actually really bad. At 411. That will change when their new automated market maker comes online. You know, right now there's no volume because the old AMM is broken. So we're waiting on that new AMM to come online. And then mStable, the revenue will just jump up like crazy. You know, right now there really is barely any revenue generation for mStable, but expect that to change very soon. That and MBTC is coming out very, very soon, which will increase mStable's TVL dramatically, coupled with the new AMM, which should be really interesting. Check about right here. Our metrics. So price to sales ratio. How is a project valued in relation to its revenues? It's calculated as a blockchain's or decentralized application's market cap divided by annualized revenue. Annualized revenue is a forward-looking revenue estimate that is calculated based on a simple 30-day moving average. Really cool. And they also have things like token trading volume to market cap ratio, TVL, gross merchandise volume, a take rate, revenue, protocol revenue. Really, really, really fucking cool. And the fact that all of this information, and this is information that TradFi guys, funds, people that are smart money, these are metrics that mean something to smart money, and they should mean something to you too. You know, when I come here and I see that KeeperDAO, you know, at a $500 million market cap, right, has a P to S of about 4.8x. And then I look at something like Aave, and Aave has a P to S of 115x. You can see that a lot more of the value of Aave has been realized than the value of something like KeeperDAO or even Hxro. You know, when I talk about value buy, that's when you come in and you buy something with the idea that relative to the underlying fundamentals, it's mispriced, it's undervalued. That's all that means. You know, when I look at Hxro, and we're looking right here at 11 P to S. Well, fuck, you know, like even Compound, in my opinion, is undervalued. A 23 P to S. But I look at something like Compound and I'm like, okay, Compound may be undervalued. And then I look at something like Hxro, and I'm looking at even more value here. And then KeeperDAO, even more value here. It's really, really interesting. Now, some people are asking, you know, MPH is also a revenue generating protocol. You know, when is MPH going to be on token terminal? When I can't make any promises, but you know, I have asked these guys to please add MPH. I asked them today, you know, and I asked them very nicely to add KeeperDAO. They were very happy to do that, and they did it very quickly. And this really opened my eyes to just a whole new world and a whole new way, you know, of looking at these things. Yeah, we can look at 0x. 0x is a P to S of 255. And even stuff like, I think Bancor is super undervalued. You know, we're looking here at Bancor at a P to S of 20. You know, in my opinion, when you see things like that have already made it to like legitimate blue chips, you know, you got Aave here at a $7 billion market cap. Like, this is the benchmark here. So the real question is, how hard can things run? Well, you know, I'm looking at something like ROOK, and I'm looking at a P to S of 115 on Aave, and well, that's a 20x on ROOK to just get to the equivalent P to S on Aave. That's a 10x on Hxro to get to the equivalent P to S on Aave. You know, you can look at things like Aave, you know, you can look at things like Synthetics. These are the blue chips. These have already made it. Synthetics, $4.6 billion market cap at about a 100 P to S. A lot of the value of these protocols may be unrealized still, but there's a lot more unrealized value relative to things like Synthetics, like Hxro. We're talking about real revenue here, right? There's a lot more unrealized value in other places, and a value buyer comes in and invests regardless of the chart, regardless of blah, blah, blah. A value investor will come in and invest in value and sell when value is realized. So moving forward, you know, and especially as they expand the service, as they add the best coins, they add the things that we're all interested in, you know, moving forward, token terminal is definitely becoming a staple in my analyses of whatever I'm doing. I'm extremely appreciative to these guys for adding KeeperDAO. Really means a lot to me. And I'm also appreciative of the product that they put out there and the fact that I can come on this motherfucker and all of this information and these analytics that I can use to inform my investing are here for now for me to use for free. You know, which is really cool. Yeah, they've got Ren, another favorite project of mine. Ren P to S at about 50. So for Ren to catch up to Synthetics value-wise, Ren would have to do a 2x, you know, from where it's at right now. And look, you've even got metrics like volume to market cap and things like that. So on Ren, you've got a volume to market cap ratio of 32%. Let's see what that's like on something like KeeperDAO. So you got volume to market cap of 2.69 here. On Hxro, volume to market cap of 0.83. you'll see lower volume to market cap ratios on the things that don't have as much interest yet, that haven't really made it. So in Aave, he's at volume to market cap around 21%. So you see that volume to market cap ratio probably really step up to the plate when these things, you know, get these big centralized exchange listings and get that legitimacy. You know, when the deal is sealed, when they're accepted as a blue chip, you know, there's going to be a lot more people trading them. Volume to market cap on M stable, 8.34. Really cool shit here, regardless. But I'm gonna post the website. You know, you can, yeah, it's super undervalued. I'm telling you guys, like, I think a wave is coming. You know, I think that ROOK is going to go up substantially. I think that Hxro is going to go up substantially. And here's the thing, these protocols, when you look at these baselines established by these blue chips that have already made it, it's clear to, you know, that the benchmark has been set for something with value. And even if Aave, let's say theoretically Aave is maybe overvalued, let's say Aave is worth twice as much as what it should be, right? Even then, the P to S ratio, if Aave lost half of its market cap, would still be 10 times the P to S ratio of something like KeeperDAO. So why is ROOK's 24-hour revenue so low? Probably because that's when the snapshot was taken, if I had to guess. Probably. MTA is probably overvalued relative to the actual revenue generated by the protocol, but the new automated market maker, you know, and what's coming in the future, I think that speculative value is definitely priced into MTA. So while it may be overvalued just on a fundamental basis, I think MTA is undervalued on a speculative basis, that those fundamentals will improve in the near future. So really cool stuff. Isn't the hiding game temporarily down? Not to my knowledge. I mean, unless that's something that's happened in the last hour or so. You know, I was looking at the hiding game transactions on Herein just an hour or two ago, and there's a lot of transactional volume being routed through the hiding game. And you know, Andreas Palius has a good point in chat. There's a lot of revenue here that you're seeing as we get more users, more adoption, more features. You know, Hxro and KeeperDAO have some substantial improvements coming to where you could see that revenue really increase in the near term. So even then, you know, when we're looking at it in terms of actual fundamental value, and then the speculative value, you know, we can be undervalued on both fronts. You know, speculators will come in and you know, they'll look at something like KeeperDAO and they'll say, well, fuck, you know, if Matcha or 1inch, if they integrate the hiding game and these big aggregators now, all of those users, which there are many, start using the hiding game, well, fuck, what do you think's gonna happen to KeeperDAO revenue? You know, that shit's gonna go through the roof. So KeeperDAO could be, I mean, absurdly undervalued when you look at it from the perspective of, at its current price, it's actually undervalued. And then based on what we know could happen, you know, if we want to speculate, if we want to look into the future and we want to speculate on future revenue, you know, come on. There's a lot of value there as well. So really interesting. Now, how do I watch the actual transactions in the hiding game? Well, I'll post this link for you guys as well. So right now, the hiding game, there is one whitelisted bot, Keeper, if you will, that facilitates these hiding game transactions. And I pulled that up here so you guys can see. And I'm gonna post the link. This is the address. You know, I use Herein to track these things. So I posted Herein, okay? And I'm actually using Herein because it makes it very easy to look at the history. And I can see these hiding game transactions. And somebody said, isn't the hiding game temporarily down? Well, it doesn't look like it because there's trades going through. And you can see trades going on right here. And wow, these are some big trades, guys. Look at this, $5 million right here, a $5 million trade, another $5 million trade. Look at this. Look at this fucking arbitrage, holy shit. And if you look at the actual arbitrage, the difference here, this is $12 million that was sent to the KeeperDAO treasury, not 12 million, my bad, $12,000 that was sent to the KeeperDAO treasury. This guy who normally would have executed some kind of big limit order elsewhere, you know, this guy was able to execute it using the hiding game. And now that $12,000, which would have gone to some rando, would have caused a gas war on Ethereum, that $12,000 goes to his pocket. And guess what? But wait, there's more, right? Not only does that $12,000 go to his pocket, but he's acquiring $12,000 of ROOK at potentially a substantial discount to the market price of ROOK. So he just by making that one trade, maybe he made some profit, but just by making that one trade, you got a guy right here that may have been able to pay himself $20,000 just to make a trade, right? Looking down the line, $70,000, $30,000, $15,000, $100,000, 70, 70, 30, 150, 60, 50, 40. I mean, the list goes on and on. $100,000, $130,000, $500,000. You're already seeing significant adoption for what, day 3 or 4 of the hiding game even being live? Like, that's incredibly, incredibly impressive. Do you have to know code to participate in the hiding game? The answer is no, okay? Now, I posted a thread on Twitter a couple of days ago, and I'm gonna pull that thread up. I was happy, I was pleased with this. This made me laugh. Oh fuck, you're gonna make me dig! Okay. Here somewhere. Here we go. Okay. So the thread is titled "The Money Printing Game," a pleb's guide to using KeeperDAO's hiding game to acquire ROOK below market price. That's the key here, and arbit like a pro. Well, what does arbit like a pro mean, right? Well, that means that I can come in, I can acquire $10,000 worth of ROOK, let's say, at 70% of what it's at on the market. So let's say ROOK's at $500 right now in the market. What if I could come in and I could acquire $10,000 worth of ROOK at $400 per ROOK when the market price in ROOK is $500? Well, that's exactly what this guide shows you how to do. Now, the interesting thing about this is that if you do that, any spread that exists between the price you're able to acquire that ROOK and the market price, you're able to immediately sell your ROOK that you made for 70% of the market price, 80% of the market price, 50% of the market price, whatever you get it for that day. And I'll explain, it's variable. I'll explain how that works, okay? But you're able to immediately take that ROOK and sell it for more money than you got it for. And then when the next day, the next epoch goes live, comes online, you can then take your now bigger stack of cash and do the same thing. And then the next day, take your bigger stack of cash and do the same thing. Compounding adds up, guys. You can make a lot of money doing this. Let's say you're able to make 10% on your money doing this shit every day, okay? Well, 10% compounded over just 1 week, that's 7 days, ends up being a 2x on the money you started with. A 2x. All this time, you didn't have to have any Rook exposure at all. We're talking about dollars here, okay? Dollars. You don't have to be a Rook holder to take advantage of this. You could just be a guy that wants to come in and wants to print some fucking money. I titled this the money printing game, right? Because that's literally what it is. Now, I highly suggest that you guys not only read this thread to understand how to do this, but also read the thread that I've embedded, okay? This one right here. Read this thread too to give you a bit of context and help you understand exactly the game theory behind Rook and exactly what's going on here. Now, I'm going to post the link to this thread right now. Okay. The idea here is that I can come in. Now, if I just want to do my trades normally, using the hiding game's limit orders. Let's say I was going to set a limit order on matcha or 1 inch. But why even bother if I can be paid to trade? If this money that would normally go to miners, that would go to arbors, why even bother making trades anywhere else if I can just use the hiding game? And I can make trades whether I'm gonna game it in the way that I'm gonna tell you, which is totally acceptable, or if I'm just trying to make a trade. Let's say I've got some Badger and I'm like, yeah, you know, I feel like taking a little bit of Badger off at $100. Well, I can set that limit order. Here's the thing, guys. Here's how limit orders work on an automated market maker. The price of Badger can wick up to 100. My limit order won't fill. Why? Because limit orders on a DEX, on an AMM at least, aren't actually limit orders. They're arbitrage opportunities. So what actually happens? How does this limit order actually fill? So hypothetically, I've got this limit order on Badger at $100. The price of Badger goes to 110. There's a bot, a keeper, that operates in the mempool of Ethereum that sees this arbitrage opportunity and sees that you are willing to accept a sale price of $100 for your Badger. This bot buys what this bot does is he uses a flash loan to sell you Badger, right, at $100, and the difference between $110 and $100, the price that Badger's at right now, that difference he puts in his pocket. Now, here's the big problem with that. That's free money, right? It is. So what ends up happening? There's not just one guy out there that's trying to fill your limit orders and trying to capture that arbitrage opportunity. There's hundreds of them, presumably. So they get in a bidding war. Let's say that they're presented with an arbitrage. You know, a great example would have been this bad boy right here. Holy fuck, another one came in. A $7 million trade right here. $22,000 to the KeeperDAO treasury right the fuck here. Amazing. That shit is incredible. But if this guy had made this trade anywhere else, right? Anywhere else, that $22,000 that is going to go to him in the form of Rook would have gone to some rando, right? Instead of him. Now here's what happens, and this is actually this is why Ethereum is so fucked, and this is why we can't trade on Ethereum right now, because the gas fees are horrific, and Rook actually solves this problem, right? Because out in the wild, if I place this shit on Matcha, if I place this shit on 1inch, you know, as a limit order, this $22,000 arbitrage opportunity that we're seeing right here, all of a sudden, all the keepers get horny over it and they start competing. Well, I'll pay, because you know, in Ethereum, it's all about transaction ordering. Whoever bids the highest amount of gas for this opportunity gets the arbitrage opportunity. And Ethereum doesn't work like Bitcoin. Ethereum doesn't have a block size limit. What Ethereum has is a gas limit. Now, there's only a certain amount of gas per block that Ethereum allows, right? So let's say that this arbitrage opportunity happened outside of KeeperDAO's hiding game, out in the wild. What happens? There's 22 grand up for grabs. So Keeper number 1 bids 0.5 Ethereum. He's willing to pay half an Ethereum in gas to make this $20,000, right? So he makes 20 grand in profit, whatever that is. Now all of a sudden you've got another keeper that says, oh yeah, I'll pay 1 gas. I'll pay 1 Ethereum for gas. Well, guess what? This motherfucker's still making a bunch of money. Then you got another guy that comes in and he goes, I'll pay 5 Ethereum for gas. Okay? And so on and so on. Eventually what happens here is that $22,000, it gets eaten up. And guess who it goes to? It goes to the miner. That's why this is called miner extractable value, or MEV for short. Because the miner actually gets that arbitrage, right? Because that arbitrage, people continue to bid to capture any profit they can for that arbitrage. It's free money, right? Would you pay $20,000 to immediately make $21,000 back? Fuck yes, you would, right? That's money. It's free money. So these guys are eating up these spreads and paying just absurd gas fees in order to capture this fucking spread. With KeeperDAO's hiding game, it's different. This MEV no longer goes to the miners. It goes to you, the trader. Now, why is this important, and how can it actually clean up the congestion on the Ethereum network? Well, your gas prices are so fucking high because these dickweeds are bidding up and willing to pay $20,000 worth of gas to capture this $22,000 ARB, right? That's $2,000 in profit for them. Why not? And guess what it's doing to Ethereum? It's filling up the blocks. Because with Ethereum, blocks have a gas limit. There can only be so much gas in a block. It's not based on block size, okay? So these are the dickheads that are responsible for making it so you can't unstake your fucking bag, so when shit gets weird, you can't sell. If we could solve this issue right here, if everybody were to use the hiding game right now, L1, level 1, base layer Ethereum is scalable enough to handle anything that we throw at it right fucking now. Now, the hiding game doesn't only do this for traders, for limit orders. The hiding game also does this for liquidations. You'll notice that in any time you've got a significant price swing in either direction, right? What happens is there's on-chain liquidations that need to be carried out. Now, these on-chain liquidations cause the same kind of gas wars to capture that profit from being the guy that carries out the liquidation, that fulfills that surface. It causes gas wars, huge gas wars. just like these arbitrage opportunities do on the Ethereum blockchain. And there is the fucking gas limit. So you have any kind of volatility and all of a sudden Ethereum's unusable, right? Blame these dickheads. KeeperDAO, that's not a problem anymore. They solved it. They solved that shit. That's the hiding game. As more and more people integrate and use the hiding game, it doesn't matter if you're a Rook believer, if you're a Rook holder, whatever. As more and more people integrate and use this shit right here, Ethereum becomes better for everybody. You can trade on Ethereum again. You can unstake and stake. You can be a yield farmer. You can be the guy that only has $5,000, but you can do all the cool DeFi shit that the big guys are doing too. That's the end game here. And that's why KeeperDAO is such a big fucking deal. It's a huge deal. Now, how can you get in the game and how can you participate in the money printing game to capture these arbitrage opportunities for yourself to get Rook at a discount to market price and continuously sell it at a premium and make money every fucking day? Well, here's how you do it. Okay. You go to app.keeperdao.com/trade. They've got a nice interface here for limit orders. Now, placing a limit order is free. If you have a smaller stack, this is the way to operate anyway. Why would you pay gas for that market order when you can let somebody else pay gas, the keeper, and execute that order for you? So let's say I just wanted to make a normal order and I've got 5 Ethereum right now, right? You're gonna have to tokenize your Ethereum, right? So if I have Ethereum, I would have to actually tokenize my Ethereum right here. So you wrap your Ethereum, Ether to wrapped Ether. Now once you're in wrapped Ether, okay, I can come here and let's say I've got 10 Ethereum I want to sell. And I'm gonna sell this for DAI. And I want to sell it at, and this is just a normal trade, right? This isn't the money printing game yet. Although you will print money, you'll get paid to trade. But let's say that I'm feeling like, I want to sell my my Ether here for $1,700. That's good enough for me, right? 1,700. So I'm putting 10 Ether up for sale for not 1,700 or for $17,000 total. Okay, at a price of 1 Ethereum equals 1,700 DAI. There's an expiration slider. I can have my order expire in 2 minutes, which means that if it doesn't fill in 2 minutes, it'll automatically cancel. Or 24 hours, 3 days, 7 days, whatever, right? Let's say I want this order to be up and I want this order to be good for a day. So what I do is I hit review order here. Now it's not gonna work because I have an insufficient balance. I don't have 10 wrapped Ethereum. But what I'm gonna actually do here is I'm gonna hit review order. I'm gonna submit the order and then MetaMask is gonna pop up and I'm gonna sign the transaction. Now they're working on adding hardware wallet support, which means that for those of you like me that use a hardware wallet with your MetaMask, you can't do it yet, but that's coming, okay? It's coming very soon. It's in testing right now. But your MetaMask is gonna pop up and it's gonna ask you to sign a transaction. You sign that transaction. In the future, you'll sign a transaction just like you would if you were signing a limit order on Matcha or 1inch. Once you do that, you sit back and you wait. You can go to history and open orders. Your trade is gonna pop up here. Now, let's say that right now, the price of Ethereum is what? The price of Ethereum is actually 1703. So I've already created a $3 spread for the keeper, right? Which is great. But here's the thing. That spread, how much money and arbitrage the keeper can make on that trade has to be greater than the amount of gas it takes to execute that trade. Because you got to remember, these guys are paying the gas for you. Why would they execute your trade and allow you to do that for free when they're losing money on it, right? This is game theory. It's incentives. If the incentive does not exist for these keepers to execute your limit order, it will not execute. Ethereum's super liquid though. Let's say I set my order at 1700 and it's liquid enough to execute. That keeper will execute my order, okay, free of charge. The profit goes to the KeeperDAO treasury, and I'm granted ROOK tokens at the end of the epoch in exchange for that. Now here's how that's determined. Because here's the thing, okay? There are 1,088 tokens approximately up for grabs per epoch, which is about 6,600 Ethereum blocks or 1 day. And those 1,088 ROOK are distributed pro rata based on the amount of MEV, miner extractable value, right? Your orders have contributed to the KeeperDAO treasury within that epoch. So let's say that there's $100,000 in contributions total, and out of that $100,000, $10,000 of those contributions came from the arbitrage opportunities created by your orders. At the end of the epoch, you would be entitled to 10% of those 1,088 ROOK that were to be emitted at the end of the epoch as rewards. Now, here's where it gets cool, okay? Let's get the calculator out for this. So you paid $10,000 in that example to get 10% of that day's emissions to hiding game participants. So 1088 times 0.1, right? So you, for $10,000 in this particular example, were able to purchase 109 ROOK tokens. So we can say 108.8, right? Or 10,000 divided by 108.8, and bam, you just bought ROOK for $92. Okay? Now, how do we play the money printing game? I'll show you how. Of course the music stops. That's weak. Okay. This is how we play the money printing game. Now, I'm going to create an artificial arbitrage opportunity for KeeperDAO in order to contribute money to the KeeperDAO treasury. So instead of selling my 10 Ethereum at 1 Ethereum equals 1,700 DAI, I'm going to create an artificial arbitrage opportunity for KeeperDAO. And I'm going to put my 10 Ethereum up for sale for 1,500 DAI per Ethereum, right? Holy fuck, dude, why would you do that? Well, I've created an artificial arbitrage of $2,000 for the keepers. They're going to execute this. That spread, that $2,000 goes into the ROOK treasury, okay? And now, as long as the treasury contributions, right, don't make it so I'm diluted so much that the contributions, you know, and the actual mining price, the acquisition price of ROOK is more expensive than what I paid, I can actually do something like this to literally buy ROOK tokens at a discount to market price. Cool as fuck, right? But here's the thing, and this is the game theory behind it. I've heard people say, well, what's the point of holding ROOK then, right? Because people are just going to be doing this, and people are just going to be getting cheap ROOK, and then they're going to be dumping at market, right? Yes, they are. But what defines value in a DeFi protocol? cash flow, okay? And as this opportunity exists and more people begin to use this opportunity, the amount of money that you'll be able to make per day will be diminished because the spread between the actual acquisition cost of ROOK and the market price of ROOK will get lesser and lesser, right? So here's the thing. More cash flow drives more value to the protocol, so therefore makes it more valuable. So even if, let's say one day, people pay too much by $10, let's say ROOK's worth $500 and they mine it at $510, well, guess what? On that one day, the selling pressure is going to be reduced until people can at least make money on that ROOK they mined, right? So there's the game theory behind it. Not only would the value of the protocol be increased because there's increased cash flows, but also the sell pressure is drastically reduced because people, game theory, right? People are not going to sell at a loss. So that market price, even if very briefly, that market price dips under the actual acquisition, that mining cost for those ROOK tokens, I expect that market price to rebound. Now, this game theory here that I'm discussing is not just me speculating. This has actually been in production, and the theory has been in testing for 3 months. The first 3 months of ROOK went through an arbitrage mining phase to where users basically did the exact same things that we're doing right now, but these were algorithmic users, guys that are operating bots, right? Coders. They've opened this same opportunity, this same game theory that has been proven over the last 3 months, where the market did carry a premium over the cash flow and over the acquisition costs consistently for 3 months. They've opened this same opportunity to average Joes like you and me. The more cash flow we generate here, the more money goes into the ROOK treasury, the higher the revenue generation for KeeperDAO is, the more valuable on a fundamental basis this token is. So ROOK by itself, how does this token have value? Well, A, straight up cash flow to the protocol. ROOK is a governance token, okay? ROOK holders will be able to vote on in just a couple of months what to do with the money in the treasury. Now, let's have a look at the ROOK treasury. As it stands today, the ROOK treasury is comprised of assets worth $27.6 million. And we're not talking doo-doo, we're talking good shit, right? Good shit. So in the future, we get to decide what to do with that. Now, what if we voted to where, let's say we paid out even 10% of ROOK's daily revenue to people that were staking their ROOK? Well, A, maybe you have to stake and bond your ROOK like you do with MTA, so it's locked. You're removing supply from the market. You're paying direct revenue to people that are staking ROOK in the future, maybe to be a whitelisted keeper. You're going to have to bond ROOK tokens to that actual keeper address, to that keeper profile, which creates a demand and use case for the ROOK token. I mean, I can't lay it out any more clear to you guys. Like, this is a fucking meal ticket right here. And the amount, the extent to which this protocol is underestimated and undervalued is baffling to me. When it literally pays you money to fucking trade and literally scales Ethereum right here, right now on level 1. Absolutely unfucking believable. Good shit. GF Survivor says Badger's paying his student loans. Fuck yeah, stay in school. I was a big crypto trader even when I was in college. I don't know if you guys knew this or not, but I failed out of like 4 colleges. One of those was one of the best schools in the country, actually. So, you know, you can imagine my parents' dismay when that happened. It was Wake Forest, actually. But I kept coming back. I kept at it. I'm very, 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 very proud of my degree in computer science now. I was finally grown up enough to realize that. I was finally grown up enough to do it. For anybody here that is watching that's in school right now, even if you're doing well in crypto, please finish your degree. I cannot stress enough how proud you'll be, how accomplished you'll be. And finishing a degree is not just about what you'll learn in school. Finishing a degree is about seeing something through from the start to the finish, despite the challenges that present themselves along the way. And that is one of the most important life lessons that you will ever learn, period. So kids, you know, I know it sounds like what I'm doing is rock star shit and cowboy shit, but finish your degree, you know? Finish your degree. I have zero regrets that I finished mine. Zero. And it doesn't matter what it is. You know, I get a great sense of self-worth and accomplishment from that. You know, and it's a part of my swagger. It's a part of my confidence. It's a part of who I am. So, you know, I wear that with pride. So even if you're in school right now, you know, classes are a drag and you're looking at your crypto portfolio and you're like, man, I made like 20 G's, you know, like why am I even in school right now? Like, yo, bro, this is the time. This is easy mode. You know, keep doing your thing. Keep getting money in crypto and stuff, you know? Worst case, that crypto comes out and you're able to be debt free, right? Shit's badass as fuck. So finish that degree. And, you know, I've got a guy here, he says he's 19, he's got too much money for his age, he's got a business doing 5K a month profit. That's amazing, you know, and huge props too. School isn't for everyone. I was making 100K a year as an insurance agent before I went back and I finally finished my degree. And that was big money, yeah. You know, I thought 100K a year, you know, that's some fucking income. I finally had money to buy a nice computer and get little frivolous things that I wanted. But in that situation, I decided that wasn't enough for me. If you're a young hustler, you know, if you got your hustle down and you've decided school isn't for you and you're not just some dickhead that's just telling his parents that and is playing PlayStation and smoking weed all day, you know, and you're a hustler and you're out there getting it, I believe in you. Go get it, man. King shit. Get it all day, every day. Not everybody has that kind of motivation though, you know? For me, it took actually making some real money and having that sense of self-worth to know that school was for me and that I wanted to go back and I wanted to have a degree. It's not for everybody. So don't think I'm talking down not having a degree, because I'm not. I'm talking down not having a degree if you're just a lazy piece of shit and you're making excuses, you know? I don't know what your hustle's gonna be, but you need to have a hustle. You know, go out there and get after it. So let's sweet. Have we really been streaming for an hour and 40 minutes? I feel like this has been a really good one too. Still got 500 people here. You know, really appreciate you guys being here and watching this. I said we're going to take a look at Nansen. So I really want to do that. We're going to look at Nansen for a couple of things. And I think that'll be a great way to conclude this. You know, if you guys have any questions regarding the hiding game, or as I put it, the money printing game, go to the ROOK KeeperDAO Discord, okay? Ask questions. The community there is super helpful. They're willing to help you out. They're willing to answer any questions you might have. Get in there. Ask the fucking questions, okay? You gotta ask the questions. You gotta put in the work. You gotta do the research. For me, this is a 12-hour-a-day job, 7 days a week. My wife bitches about it all the time, but I tell her, you know, sweetheart, like, you bear with me for the next year, and neither one of us is ever working a day in our lives again. You know, a big part of my life is I really want to be a good father one day and be a good dad, and I can't imagine me sacrificing everything for the next year and setting myself up to be in a position where I can be a professional dad. That shit would be fucking sick, right? Imagine, like, I can't imagine my son having that privilege, because my dad was a fucking baller. My dad made a shit ton of money, smart as a fucking whip, right? But he wasn't a professional dad. Like, imagine growing up and having a fucking professional dad as a father, you know? That's like straight up heroic. And that's like my dream. That's like what I want to give to my kids. You know, I'm 31. I'm hopefully gonna have kids pretty soon. You know, I'm hoping to announce to you guys that I'm gonna be a dad soon. I saw smart contractor Benjamin Blunt's posted on Twitter last night, you know, holy shit, he's gonna be a father. And I just, like, I'm at the point in my life where, you know, that actually like really hit me emotionally, because I put myself in his shoes, and I don't have any kids yet, but I just started thinking about like what that moment for him feels like, and it made me so happy and like excited. Anyway, you guys got me like going now. But you gotta have these goals, right? You gotta have these goals, and you gotta be able to have these dreams, and you know, that's what we're all here in crypto, right? We're all here to realize these dreams, and people don't understand, like, there are gonna be people in this chat right here that you don't believe it right now, and it doesn't matter how many times I tell you, but if you put in the fucking work and you play your cards right, there's people listening to this stream right now that will be millionaires in the next year. And that's just by working their dicks off, putting in the time, making those sacrifices, right? That's why we're here. We're here to have a better life. We're here to escape the system. That's why I'm here, at least. You know, I'm not here. I don't want to be a wage cuck, you know? I grew up, my dad was a wage cuck. He was a high paid wage cuck. He's got his own business now, you know, so he's a wage cuck for himself. But still, you know, you don't want to be a fucking wage cuck. You don't want to work for somebody else. You know, the dream is to have freedom. And what is freedom? What's more free than being able to dictate your own schedule? What's more free than waking up in any fucking given day you choose and say, I'm going to go back to bed and sleep 4 more hours because I fucking can. That's badass as fuck. You know, you think that freedom is buying a $5 million mansion, and you think that freedom is having a fucking Ferrari. It's not. Those things are nice, right? Freedom is being able to go to the gas station and fill up your car with fucking gas and not worry about it. Freedom is when you're able to have your bills on auto pay. Freedom is when you're able to sleep as late as you fucking want. Freedom is when you're able to go on fucking vacation next week on a whim because you fucking feel like it, and there's not some dickhead telling you, oh, you know, you didn't submit your notice in advance, or you don't have enough PTO. I mean, fuck, I've been there. That shit blows. Fuck that shit. Fuck that shit. Fuck that shit. Yeah, freedom. You want to play video games all day? Play your fucking video games all day. Hell yeah, brother. If you worked hard enough and you set yourself up and you put yourself in a position where you are free, you can do whatever the fuck you want without stress, because you know you're good. You got it. You're made. That's why we're here. Do not underestimate the amount of work that it's going to take for you to make it. I cannot stress that enough. You have to eat, sleep, and breathe this shit. Every day. Every day. If you don't, you're not gonna make it. But if you make these sacrifices, this is a once-in-a-lifetime opportunity. Get in there, take advantage of this shit, change your fucking life right now. Now, changing your life literally involves not only just the research, but it also involves you culling your greed, you know, de-risking, shifting risk, you know, having smart asset allocations, you know, having convictions, being in enough things to where you won't get nuked if one thing goes under. When you get a big fat stack of cash, make your money work for you. Diversify it enough to where something happen, it's not going to take you out of the game. You know, making it isn't just, haha, you know, I bought some shitcoins and the number went up and I'm, you know, on paper, I'm rich. Making it entails so much more than that. I tell everybody, have a plan right now. Don't have a plan tomorrow. Don't have a plan a week from now. Have a plan right now in your head. Yo, I'm 10x up on this. I'm shaving 20% off. Be a robot. Write that fucking shit down and tape it to the bottom of your computer monitor. Put a sticky note on your fridge. Remember to de-risk. Set a reminder on your phone that pops up every day. I know everything's awesome, but remember to be de-risking. Remember to be shifting that risk. I've gotten hilariously rich and hilariously wrecked more times than I can count. And it's all because I didn't have a plan. I've always been a really good researcher. I've always known what makes things go, but that's not enough. I wish I realized that in 2017, you know? By the time I made it, I didn't have a plan. It was too late. When you're in that state of euphoria, you can't think straight. You can't think straight. You can't have a plan then. You can't make a plan then. And even if you have $50,000 to your name, $10,000 to your name, start asking yourself, what would I do if in a month or two I found myself with 100 grand? What would I do in a month or two if I found myself with 200 grand, with $1 million? Maybe it doesn't happen, but what if it does? Have a fucking plan. Be ready. Okay? Let's look at some shitcoins. All right. What if? You will never ever trust me when you shave 20% off of something, and don't take 20% off and roll it to more heavy risk. Take 20% off and roll it to less risk. That's Bitcoin or stable coins. Maybe Ethereum. Maybe you toss it in one of these D-hedge pools. You know, let one of these pros manage your money. You know, Convex Monster and Wingarian. That Asian quant, I think. I mean, these are galaxy brains. You know, let them manage your downside a bit on what you've de-risked. Still get exposure to the market with less risk than you're taking, right? De-risk. De-risk doesn't mean no risk. De-risk means shift from high risk to lower risk. This market's balling. Have some exposure, but de-risk. Okay? Now another reason I asked Nansen, or I love Nansen, they're really, really receptive to customer requests. One of the issues with tracking any kind of rebasing asset, it's a massive pain in the ass because the actual supply goes up and down. It expands and contracts, right? So one of the negative things about this is it hurts composability in a DeFi sense. I can't take a rebasing asset and use it to farm or do other shit and other protocols. It fucks up. So how do you solve this? Excuse me. Well, it's easy. You have a vault, right, that issues a token that's representative of your share of the vault, and the vault contains the rebasing asset. That's exactly what Badger has done with their dig vault. When you get in dig and you put your dig in a vault, you're issued BDIG. The amount of BDIG you have doesn't change. It stays the same. It's representative of your share of the rebasing asset in the vault, okay? So the fact that if we can track BDIG right here, we can actually take a look and get some insight as to who's holding DIG, what they're doing with their money, etc., etc. And actually, I'm going to go into great detail on this, so this is the only thing we're going to look at on Nansen. You know, I want to make sure I'm clear about this and explain my thoughts here. Okay. So what is DIG? Well, DIG is synthetic, composable, rebasing Bitcoin. DIG leverages lessons learned on Ampleforth and other rebasing coins, along with lessons learned from algorithmic stablecoin attempts, empty set dollar, dynamic set dollar, basis cash, to create a synthetic version of Bitcoin that is composable and usable in DeFi to farm with. Okay? So you see here, these are the top balances of BDIG. These are your holders. I ask myself often, if you're looking at holders, right, on any kind of asset, if you're looking at the top dogs, you want to see what they're doing. You want to follow the money. We're watching whales, right? So I'm looking at this right here, and I'm seeing over the last 7 days, we've got our top holders right here, but over the last 7 days, what's been going on here, right? Well, people have been adding or holding. You do have some people that have been selling, like this guy. This guy used to be one of the largest holders. He had bitch hands. He actually sold like 2/3 of his DIG before DIG pumped 2x recently. So F in the chat for him. Bitch hands. But everybody else, and you know, this guy's taken 2 off. This guy's taken 1 off. BDIG, not DIG. Okay, BDIG, 1 BDIG equals like 1.8 DIG. Okay. But for the most part, the top dogs here are holding what they got, right? 0 change, or adding to the stash. That's what we have. Now, one of the interesting aspects of DIG is actually who has DIG. Badger has released analytics that demonstrate that 90% of Badger holders have actually been Badger holders from the beginning. Badger is the benchmark for the strongest hands in crypto, period. Period. Badger holders are the strongest holders in crypto, hands down, proven by data, period. Now, DIG. Guess who got the DIG? Who got a DIG airdrop? Who? Badger holders. So these same guys that have been proven to be the strongest hands in crypto are now the top dogs, the people that are holding DIG. We already flushed the bitch hands at the beginning. When we jumped from 100,000 to 30,000 or so, there was Sushi Swap exploiting FUD or something like that. It had nothing to do with DIG. Sushi had initialized the pool incorrectly, and somebody was able to drain off a non-significant amount of money. And the bitch hands got shaken. Bye-bye. What we're looking at is the strongest holders in DeFi right here. And they're adding or holding for the most part. But it's important to see what the smart money's doing. All of these guys have the intention to just ride this shit out. Now, how do you actually make money in a rebasing coin? Well, in a rebasing coin, the price doesn't matter, right? How you actually make money on a rebasing coin is surviving through a few expansion and contraction cycles. Now, DIG is interesting because I believe DIG has a lag factor of 10, meaning that, let's say DIG has a market price of 70% over the price of Bitcoin. Well, DIG would experience a positive rebase of 7%. So let's say you have 1 DIG before that positive rebase. After the positive rebase, you're going to have 1.07 DIG instead of 1 DIG. It's an elastic supply. So on an asset like this, the only thing that matters is not the price. The price doesn't matter. The only thing that matters is the market cap. Now, there are going to be guys that game the price swings, okay? When it's above peg, they're gonna sell. When it gets closer to peg, they're gonna buy. When it gets below peg, they're gonna buy. And they're gonna trade those swings. That's fine and dandy. I don't wanna do that. I know the real money on a rebasing asset is made by being a holder, is made by surviving multiple expansion and contraction cycles. So this is really cool. CoinTrader Pro, and I'll post a link to this, actually has dig now. Now let's look at Ample, okay? Just as a reference point, a lot more people have probably heard of Ampleforth. But I'm gonna look at Ampleforth versus the dollar. This is the weekly chart. And the average guy would come in and they'd look at this chart and they'd say, well, the fuck? Like, how do you make money on that? Like, you holding, like, what good does that do you, you know? Like, here it's 42 cents, and now it's fucking $3, and, you know, now it's 62, and now it's $1.43. What's oscillating around this peg, right? And Ampleforth is pegged at $1. And you can see that as time goes on, the actual amplitude of these waves is getting smaller and smaller. You know, we're approaching relative stability here. You know, as a rebasing asset matures, that's the goal. I think Ampleforth has been a fantastic demonstrator of that concept. But let's look at Ample, how you're really supposed to look at Ample. And that is in terms of market cap. But wait a minute. How has the Ample market cap, right, increased by 50,000% when the price has just been oscillating around $1? Well, that's where the elastic supply comes in. The idea with the rebasing asset is that if you own 1% of the supply, and that supply contracts and expands, even if it expands by 10x, and the supply is 10x more than it used to be, you still own 1% of that supply, no matter what happens, okay? So you didn't necessarily make money on the price going up and down, right? You made money by surviving through contractions and expansions, right? The idea here is that you're going to let the supply expand, and that you're going to get that new supply that's created in the market. You're going to maintain your share of the overall supply, and you're going to capture that new supply that comes into the market. Now, what is dig? Well, dig is going to do the same thing that Ampleforth is doing, right? Although the target is moving. But Ampleforth, remember, Ampleforth did that, right? It's continuing to get more and more stable. The end game here is that one dig equals one Bitcoin. Dig is Ampleforth for Bitcoin. So, what if I can have dig, I can survive multiple expansion and contraction cycles, okay? That means that I've got more dig, now I've got more dig, now I've got more dig. Okay, we've expanded too much, time to cool off a little bit. Contract, contract, contract. Okay, we've reached a point where it's time to expand again. Expand, expand. Oh, we've expanded more than we did last time. Well, guess what? That's how you make money on this shit, okay? The idea here is that dig right now is Ponzified because the market cap is low. It's extremely liquid, like $20 million of liquidity liquid. You've got GigaChad 0xB1, huge supporter of dig and Badger. providing massive liquidity. And for anybody that doesn't know who 0xB1 is, he's a public whale with like an $800 million net worth that talks about what he's doing and what he likes. He likes Badger, he likes Dig. What kind of world do we live in? I mean, fuck, isn't that incredible? Okay. So you want to survive those expansion and contraction cycles, and as the supply expands and as we reach a point of relative stability to where the market is okay with the market cap of all the dig out there, you want to survive until then. Now, if you look at Ampleforth, this is the market cap chart, right? Ampleforth had several expansion and contraction cycles. You know, expansion cycle right here. This is the market cap chart. Contraction. So these people, they might have had 1,000 Ampleforth right here, okay? So let's take from right here to right here. So maybe they had 1,000 Ampleforth here, and then up here, maybe they had 5,000 Ampleforth, right? And then during a contraction, they had 1,000. Now they have 5,000. Okay, so we're gonna contract because we went too hard, we expanded too fast. And now maybe I have 2,000 Ampleforth. Well, I still had more than I have more than 1,000 Ampleforth, right? That's what I started with. Well, then it expands again. You know, I have 2,000 here. Well, now I have 8,000 or 9,000 Ampleforth. Whoa, 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 you know, slow your roll, homie. We went up too fast. We expanded too fast. Let's contract. Bam. Now I have 4,000 Ampleforth. Well, it doesn't matter, right? I started off with 1,000. How do you make money in a rebasing asset? By having diamond hands and surviving these multiple expansion and contraction cycles. And when do you sell a rebasing asset? After the mother of all expansions. When the FOMO kicks in, the market cap of Ampleforth in this instance went up by a factor of 10,000%, dwarfing previous expansion phases. And well, guess what? It had to contract because of that. But even then, so let's say I've got my 4,000 Ampleforth right here, and now after this, holy shit, I'm rich. You know, I just made what, 10,000%? What is that? 100x? I've got 400 grand. I've got 400,000 Ampleforth now. Well, I'm still a believer in Ampleforth, so even then, and this is just to demonstrate how diamond hands make money in rebasing coins. So it pulls back down, right? Well, that really sucks. It pulled down about 90% from the top. You know, DeFi summer was a little bubble. It popped. Even then, you know, I had 400,000 Ampleforth or dollars presumably, and now I have at the bottom 40,000. But didn't you start out with $1,000 down here, and you're still sitting at a 40x? Sounds pretty legit to me. Okay, well, I'm gonna get an Ampleforth right here, you know, or I'm gonna continue to hold. I've got my 4,000, and look what we're back at right here. So I've almost got my entire $4,000. I'm almost back to my ATH here. When you are charting a rebasing asset, you don't chart the dollar value, you chart the market cap. Check this out. Isn't that incredible? Look at this. When we broke out of this trend, see how it's the market cap, okay, is respecting this trend line. And we broke out, we tested the trend line, and now we're moving up off the trend line. And these market cap levels will act as resistance as well. So bam, right? So I use Ampleforth as a good example of this because there's already chart history where I could demonstrate the concept of supply expansion and contraction. Having Dig is a great way to have exposure to Bitcoin, okay? But the advantage right now of holding Dig over Bitcoin is that when I look at Ampleforth, Dig is somewhere right here. Dig hasn't had its giant expansion yet. So the idea here is that I've still got exposure to Bitcoin, but this is Ponzified. Not only can I capture that Bitcoin upside, but I can also capture upside in the sense that I literally print more dig, basically Bitcoin, right? Just by being a holder and surviving multiple expansion and contraction cycles. Now, dig is finally on this service. You can type in dig right here and you can click dig market cap. And there is a bit of history missing for dig. But the true chart looks something like, oh fuck, I'm gonna have to put this on like a 1 hour time frame. The true chart actually looks something like this, or on that side. So dig broke out somewhere in this area, okay? And dig market cap is now in price discovery. So I would expect a bit of expansion here, but the real question is, how fast does it expand? How hard does it expand? How many expansion and contraction cycles can you last through? Dig is a $90 million market cap. Think about some of these other algorithmic stablecoins, empty set dollar, dynamic set dollar. Market cap wise, those went to what? 300 million, 500 million. Let's look at the market cap of Ampleforth right now. About a $400 million market cap. Well, dig is at a $90 million market cap. So there's at least, even in addition to what I can get on Bitcoin, there's at least a solid 3 or 4x to be had here, in my opinion, you know, when it comes to dig. And you can get that just by being a holder and just by surviving. Oh, and by the way, when you deposit your dig into the vault to get B-dig, there's farming opportunities that are coming up. So while you are holding, while you are surviving those contractions and expansions, you can take that B-dig and you can farm with it, okay, soon. Okay, you also, when your dig is in that vault, you automatically generate about 200% APY. It goes straight towards your dig position within the vault. You don't have to claim it. There's no gas. You're a yield farmer. Dig is the rebasing asset. It goes up and down. When you deposit your dig into the vault, okay, you're issued B-dig. B-dig doesn't change. The amount, if I have one B-dig, I'll always have one B-dig. But the amount of dig that I have changes, right? That's just my share of the vault that contains the rebasing asset. And that's what makes dig composable. Actually, super, super cool. And you know what? Not many, and it's so simple, like when it's explained, right? It's so fucking simple. Even like the biggest brainlet hopefully understands like what I just talked about. You know, but one of the funny things here is that there's so many people that have no fucking clue how rebasing works and are just gonna pass up on it altogether when there's opportunity in the market for you right now. So, you know, use that knowledge, use it to your advantage. If you own 1% of a rebasing asset, no matter how big or small that supply gets, no matter how much the supply inflates, you will always own 1% of that rebasing asset. The thing that's static, like if I bought 1,000 Bitcoins right now, right? The price of Bitcoin can go up or down, but I'll always have 1,000 Bitcoins. With a rebasing asset, the thing that's static is the percentage of the supply that you own, not the number of coins you own. So guys, wow, what an amazing episode. I really enjoyed doing this. I feel like there's a lot of good information. You know, big shout out again to Token Terminal for adding KeeperDAO. Big shout out for allowing this service to be free right now and allow anybody to get access to it. Big shout out for adding KeeperDAO when I asked them. Seriously appreciate that so much. You guys check them out, Token Terminal. If you don't know the website, come look at my Twitter. I've tweeted about them like 5 times today. You can come check them out. Not a paid shill. Never will take money to shill. I use and talk about badass shit. That's it. So I hope you guys enjoyed today's episode. I'll catch you on Twitter. I'll catch you in the trading pit. Be safe out there. Change your life. De-risk. Manage your risk. Be about it. I'll see you guys next time. Adios.